What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol NAKD for Cenntro Electric. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talked about it just yesterday. We talked about the fact that breaking down underneath this 481 was really not a good thing for NAKD. We basically have no levels underneath us to really be paying attention to until we come into 327 and 225, very historic areas. Now, don't get me wrong, we did start to print a bit of a lower wick on today's session, and we're coming off of now 6 days down in a row. So maybe there's a bit of a relief rally here, but we have very obvious areas to pay attention to confirm that this will remain in a downtrend or break the downtrend and start to trend higher. It's very, very simple. If this does result in a bit of a rally, the first area you need to be paying attention to is really, let's go ahead and clean some of this up actually so we're not being too distracted. There we go. It's looking a little bit better. The first area, of course, is the gap fill overhead. So we did gap down on today's session. Anything that takes out today's high and moves into $4.60, be on the lookout for any resistance there, right? So let me illustrate that on the 30-minute time frame. Anything that does this, and when we get here, starts printing inverted hammers, watch out for the gap fill reversal, right? We would expect lower after that, and then we can continue on our merry way in the downtrend. So that's bearish, number one bearish activity if we get any sort of dead cat bounce. Filling the gap and reversing out of it would not be a good sign. That would be relatively weak in comparison to what it would take to get back into an uptrend. We know that we would have to break that resistance trend line. The next major area to pay attention to is really the flush point around 5. We discussed that in yesterday's video. So even if we fill the gap and move a little bit higher into that 5 area, be on the lookout once again for those same types of candles, inverted hammer, indecision doji, anything that looks like this around these areas of importance, look to flip short. As we know, we can't really short this. We'll talk about that in a second. Just avoid longs essentially if we take out those lows and continue on our merry way. The nice, very strong daily downtrend would likely resume after some sort of lower high, something like that, right? You can see this pattern over and over again, lower highs. We're just waiting for the next one in here for it to roll back over and then make a new lower low once we cross down underneath 4 once again. So the chart continues to look bearish. That's the only update to really give here. Sure, a little bit of a hammer candle did print. I don't really think it's worth trying to scalp long in here, looking for what, 47 cents to 460. Geez, all over the place with my math here, but that's what, 13 cents? Not really something worth swinging for here, noting that your risk would be a flush all the way back down to the lows closer to 4. I'm just not seeing any reason to be trying to go long inside of NAKD. I would wait for some sort of pattern, some sort of easily identifiable reversal where you have a clear entry, a clear stop loss, and as of right now, just not seeing it in the name. That's going to wrap up the video. If you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.